Let's start off with the market's performance in general. As Mashudu said, volumes are relatively thin. Investors rebalancing their portfolios, holding back their positions also ahead of the MPC's announcement tomorrow. What do you make of market's performance?
Thank you, Lerato. I think you got it spot on when you said that investors are holding on to their portfolios. They are opting not to trade at this moment, waiting for the MPC outcome tomorrow, which will eventually decide the direction of the market.
All right, let's talk about the MPC decision because, as I said earlier, ahead of the end of 2011, that's where we started to see a lot of decisive actions, aggressive interest rate hikes, and eventually we saw a leveling out of a high rate of inflation and higher interest rates. That's made the shilling a little bit steady. Is there room for further maneuver here?
It's a tricky situation. The market consensus is that the MPC will hold the rate at 18%, but looking at how the interest rates are still high, the inflation is still, it came down over December to 18.93. This is because we are feeling we're starting to feel the effect of the harvest of the rains which happened in earlier this year. So it really depends on a lot of things, but when it comes to the CBK, their main concern is the shilling. If you look at the exchange rate volatility, it's still very high. So on a personal note, I think they will increase it by 100 basis points, maximum 150 basis points.
All right, so if interest rates are set to rise, that should also see T-bill rates also rising to an extent. And this now raises the question of what analysts are calling the turf wars on the NSE in Kenya. Do people move into equities? Do they go onto the fixed income side? And there's a sense that things are looking a lot brighter on fixed income, especially because we're also seeing a discount on the pricing of bonds. What's your sense?
As I said before, it is a very tricky situation. But at the moment, the fixed income market looks more appealing to investors due to the high rates. The equity market, we expect it to start picking up at the end of the Q1, at the end of Q1. We start to expect some gains and some rejuvenated activity in the market, basically.
All right, let's talk about what's happening, though, on the fixed income side. The Business Daily talks about the possibility that British American investment company could see its 2011 profits fall by 25%. Mashudu also alluded to that. You know, a lot of fanfare. Some of these companies came to market last year, but some were raising questions as to timing, given the significant declines in the NSE. So that we're getting a profit warning is not a surprise. But are things going to change for some of these companies in 2012?
Definitely. With the British American, it's very heavily exposed to what's happening in the equity market. Therefore, the profit warning wasn't as much of a shock. If you look, let me give you an example like Centum. Centum saw this thing, they were ahead of the curve. Yeah, they knew the market would not perform as well as in it will become less performing. Yeah, in the long run. So what Centum did, they reduced their exposure to the equity market and started investing more in real estate and other profitable ventures, which is what we're seeing British America intending to do in 2012.
I'm glad you've introduced this dimension of more profitable sectors being property, because CFC Group is also doing a similar thing. They've set up a property fund hoping to attract retail investors. Retail investors haven't been particularly active on the Kenyan market this year, obviously because of jitters of where the returns lie. Would they move into a property fund?
Sorry, I didn't get the question.
I'm saying I'm glad you're mentioning property, real estate, because the CFC Group is also talking about a property fund where they're hoping to entice retail investors. Would retail investors invest in such a venture?
Yeah, the real estate market is by far the most performing market at the moment. It has been growing exponentially since 2004, and because of the current high interest rates, which will affect the mortgages and the mortgage payments and repayments, we'll see a slight slowdown in the real estate market, but still the property market is a very, very good investment. That's why we're seeing a lot of these companies investing in the property market.